Good morning, students. Belated Merry Christmas from my side. I am CA Ankit Sharma, your income tax faculty for the today's session also, and this is our last session. Today we will complete our income from other source, and we have only one session regarding income from other source topic, which is the last head of income. And today we have to complete the provision part, the test your knowledge part, and the MCQs also. So today we have to cover a lot of things, but the topic is the good thing about this topic is income from other source. It's a simple topic. Do not have much calculative provision like capital gain, like PGBP, like salary, or like income from other sources. And very individual provisions, only one provision which is regarding the gift provisions is a we can say that the huge topic in this chapter. Otherwise everything is very simple and individual very short topics are there. So we will complete the provision part, the test knowledge part, and the MCQs also. So the good news is I will be back on 23rd of January to take the class regarding the return filing process. I have 3 more lectures. The BOS, the ICAI has allotted me 3 more lectures. That will be, I guess, on 23rd of January. And then I guess 28th and 31st of January regarding computation of total income and tax. The computation of total income and tax is a very, very, very important topic. It's the last topic and it covers all the provisions, whatever we have studied or we have gone through in income tax chapters like house property, salary, tax calculation, etc., etc. So we are going to see each other after today class on 23rd of January. Okay. So we will see in the next year, that is 2024. So before starting the class, let's take the good morning wishes of everyone. Good morning, Suprabhat, Namaskar, Sastrikal, Kem Cho, Vanakkam, Kasakai, Subha Bakhair to all of you. So, good morning, Kiran. Good morning, Dev, Parth, Ramadevi. Good morning, Vanakkam. Okay. Advance Happy New Year wishes. Okay, thank you so much, Ramadevi. Mohammad Sohail, good morning. Mr. Mohammed, good morning. Ajay Chauhan, Parthisithe, good morning. Prashant, Anirudh Jadhav, Swati Pandey, Sankaran, Priya, Almas, Pooja, Sakshi, Rasmita, Neha, Ritro, Sangithe, Hardik, Samran Bhai, Gareja, Hemlata, Tumpa, Manohar, Swati, Krishna Gautam, Prashant, Gautam, sir, the GST part would be taught by ICAI, of course. Of course, I guess there must be GST classes must be running, or you should check the schedule that has been uploaded by the institute. So, Sheel, good morning. Sheel, it's not the last class. I just told you that I will be back on 23rd of January to take the class regarding return of income. That's a theoretical provision and the most important two topic, that is computation of total income and tax. I'll be back. Okay. Shweta, Gopi, Hiba, good morning. Navneet, Mr. B. Livingstone. Okay, Mr. B. Livingstone from England. Mansi, good morning. Nikunj, good morning. Kokinati, Bala Murali, Krishna, good morning. Mukteshwari, good morning. Vaishali, good morning. Mr. Kota and Miss Komal Prajapati. So, a very warm welcome from my side to all of you, to all the future chartered accountants who is there. Okay, so let's get started with thought for the day. This is our thought for the day, which says you are not judged by the height you have risen, but from the depth you have climbed. You can see it's a very, very powerful quotation, very powerful quote also. So people will see whenever you will be succeed in your life, you are a successful person. So you will not judged only by the success you get, but from where you have done that. That means the struggle, the climb you have made to come to the point where you have rise yourself. So that's also matter, that how much struggle you have done, how the condition was there against which you actually got your success. So that will be counted whenever you will be on the peak of a mountain, that how much you have climbed. Suppose you are on an Everest, and that you uh, at the peak of any mountain with the help of an helicopter. Another person have climbed the whole mountain and then reached over there. So definitely the other person will have more respect from anyone else. Even you are on the same point, but how you came there, how the struggle you have done for this journey, that's also matter. So that was the thought for the day. And now we are moving on to the notes part. I have uploaded the MCQ of capital gain also, and I have uploaded this provisions of income from other source also yesterday. So you can download the notes when they will be available. So it's not important to win all races of life, but to finish every race with best effort is important. So just be on the right track, give your best, and if you are giving your best, I believe that you all will going to complete this course and will be a chartered accountant. So you will be everyone, you will be a chartered accountant. So this is income from other source. The provisions are I personally believe that's a very simple topic. Not much complicated provisions are there. And the basic charging section 56 also. It's very simple. Like the other charging section, like we can say, the other heads charging section talks about what is going to be included in their respective heads. For example, if we talk about salary, the charging section 15 talks about if there is employer-employee relationship, then any payment which comes in this relationship will fall under the chapter salary, whether it's due or received, whichever is earlier. So it talks about a relationship which is regarding employer and employee. When we talk about income from house property, under section 22, it says if there is a building, if the assessee is the owner or deemed owner, and if it has not been used for your business or profession, and from that building, if you have any annual income, that will be your income from house property. So it describes what kind of income is going to be taxable under income from house property. When we talk about PGBP, so we have section 28, which have multiple provisions, multiple points. But the summary is just like this. If you are carrying any business or profession, then any income which is accrue or arise directly or indirectly for carrying out any activity or for not carrying out any activity due to that business or profession is going to be taxable under PGBP head. We have multiple points regarding it, but the summary is just like if you are carrying any business or profession, then any income directly, indirectly accrue arise for carrying out any business activity or professional activity or for not carrying out any business or professional activity. That will be fall under PGBP. Clear? Then the last topic we covered, capital gain. Charging section 45. It says if there is a capital asset and if there is a transfer, then that is going to be chargeable under the head capital gain. So these four heads, what we have covered in our earlier sessions, almost earlier, we have completed 17 sessions regarding this. So they talk about what kind of income is going to be included under their respective heads. But now we are talking about income from other source. Income from other source under section 56, it says any income which is not chargeable to tax under above head. Any income which is not included under the above four heads but chargeable to tax under income tax. That means that is not exempted. So if there is any income which is not included, any income not included under above heads of income but chargeable to income tax under this act, that is going to be included under income from other source. So income from other source does not talks about which kind of income I am going to taxable. It says if there is any income which includes in the definition of income and chargeable to tax, but does not include under salary, house property, PGBP or capital gain. So for that kind of income, I am going to include it in income from other source. So जैसे कहते हैं ना हिंदी में जिसका कोई नहीं होता उसका खुदा होता है, वैसे ही इनकम फ्रॉम अदर सोर्स कहता है if there is any income, अगर कोई ऐसी income है which is not included any four preceding heads, that is going to be taxable under income from other source like bank interest income, dividend income, etc. So those income does not include under salary, house property, PGBP, capital gain. That is going to be taxable under income from other source, and there are certain specific income. There are certain specific income which will always going to be taxable under income from other source. So what are these kinds of income? What is this concept of income? What is the taxability of those kind of income? We are going to read it one by one. So charging section is very easy. It does not have any its own character. It says those are not included in any other head is going to be taxable under income from other source. Introduction part talks about it. Any income, profit or gains includable in the total income of assessee, which cannot be included under any of the preceding head of income, is chargeable under the head income from other sources. Thus, this head is the residuary head of income and brings within its scope all the taxable income, profit or gains of an assessee which fall outside the scope of any other head. Therefore, when any income, profit or gain does not fall precisely under any of the other specific head, but it's chargeable under the provision of the act, it would be charged under this head. Same, simple. Now we have some specific income, and that specific income is going to be taxable always under income from other sources. So the income chargeable only under the head income from other sources. These are specific income that is going to be taxable always under income from other sources. First one is dividend income. So we all know what is the meaning of dividend. If you have any kind of shares and if there is any dividend has been declared by the company on those shares, that's called dividend. Dividend income is always taxable under the head income from other sources. The term dividend as used in the act has a wider scope and meaning than under the general. So generally we understand that dividend means when any company earns some income and if the company wants to distribute that income to its shareholder, that is technically called dividend. It's that simple. But under income tax, the dividend concept is not this much. It has been wider scope, wider meaning. Under income tax, dividend has been divided into two parts. One is dividend, which is normal dividend, about which we just talked about, that if the company having any profit and if company wish to distribute some part of that profit to its shareholder, that is called dividend. So that is normal dividend for us. If we talk about dividend under income tax purpose, then we have dividend, that is the normal dividend, and it arises when company earn profit and a part of profit has been shared with the shareholder. That's called normal dividend. It can be interim dividend, final dividend. We have the bifurcation of that later on. But there is one more kind of dividend which is new for you, that is called deemed dividend. Deemed means it should be treated like a dividend. It is not actual dividend, but we are going to presume, we are going to deem, we are going to equal that kind of distribution to the dividend. That's called deemed dividend. And you might have remembered that this deemed dividend word has also come across in capital gain chapter when we discussed about the provision regarding liquidation of company, capital gain in case of liquidation of company, then there was a concept of deemed dividend. And I have told you that we will discuss that concept in detail in income from other source. So the day has come. So deemed dividend, which has been explained over here, is five kinds of deemed dividend. One is under section 222A, B, C, D, and E. So we have five kind of deemed dividend. One by one, we will discuss about it. Very simple provision. Just do not bother about income from other sources because this is the simplest chapter. Having only one or two kind of provision which has some kind of numerical treatment. Everything else is just theoretical. You just need to learn it, just need to remember it. Okay. So deemed dividend still is very simple concept. So A is distribution on release of company asset, then distribution of that, etc., etc. We will discuss it one by one. So dividend covered section 222A to 222E. That is deemed dividend. According to section 222, the following receipts are deemed to be dividend. First one, this is A, that means section 222A. Distribution of accumulated profit. Accumulated profit means your reserve and surplus. Your reserve and surplus, that is means accumulated profits, entailing the release of company assets. So if your company distribute any asset, any asset to its shareholder, so generally when profit distribute by company, that is dividend. But if company distribute any asset to the shareholder, that distribution is also going to be treated as deemed dividend in the hands of shareholder. So any distribution of accumulated profit, whether capitalized or not. Capitalized or not means if any part of reserve and surplus has been used to issue shares, that is called capitalized part. So that is also going to be included for the purpose of accumulated profit definition. तो अगर रिजर्व एंड सरप्लस में से कोई भी पार्ट का यूटिलाइजेशन शेयर्स इश्यू करने में किया गया है, so that part also going to be treated as accumulated profit. We have the solved example, do not worry. By a company to its shareholder, if dividend is dividend, if it entails the release of all or any part of its assets. So simple provision says when a company distribute asset to its shareholder, that is also dividend. Here is the solved question. Very simple solution. Very, very simple. You can see equity share capital including bonus shares of 1 lakh rupees issue out of reserve. So I was talking about this. If any amount of reserve has been utilized for the purpose of issue bonus shares, that has been capitalized. So for the purpose of deemed dividend, we will take that amount also as reserve and surplus that will be treated as accumulated profit. So this is technically accumulated profit. That is 2,20,000. But because it says 1 lakh has been used from reserve and surplus for the purpose of issuing bonus shares. So technically my accumulated profits is now 220 plus 1 lakh. That was 3,20,000 rupees. Clear? So now question says company distributed asset of rupees 2,25,000 to its shareholder and the FMV are as follows. Always remember, for the purpose of section 222A, the deemed dividend need to be calculated as follows. FMV of asset distributed, that will be given in question, or accumulated profit, whichever is lower will be your deemed dividend. You should note down this formula on your notes, etc., whether now or after the class, whenever you want. So this is the formula you need to apply to find out the deemed dividend value, FMV of the asset or accumulated profit, whichever is lower. So case one, it says company distributed asset worth rupees 2,25,000. But we have to take the FMV, not the book value. So this 2,25,000 is your book value. So FMV was 150. So suppose the FMV of this 225 was 150. So 150 or 3,20,000. Lower will be deemed dividend. So if the FMV is 150, these all four are separate example. Okay. So if FMV is 150, then deemed dividend would be 150. If FMV of 2 lakh, then again 2 lakh or 320. Then lower is 2 lakh will be deemed dividend. Then 3 lakh or 320. Lower will be 3 lakh. 4 lakh or 320. Now lower will be 320. So that will be deemed dividend in different cases. That was section 222A. Now 222B. It says if distribution of debentures or deposit certificates to shareholders and bonus shares to preference shareholders. Okay, there are more good mornings from Avinash, Kota. Nas Parveen Raima. Good morning, very good morning. Avinash saying, sir, please explain illustration 13, page number 444. I will definitely going to try that if we will have spare time. First of all, we have to cover income from other source provision because we have only one session regarding it. If I am not able to take your query, or I guess it's regarding capital gain, illustration 13, then I will solve it and I will upload the solution in a easy way. So you will be able to understand the solution. Okay, Mr. Avinash. Retro Banerjee, sir, if transfer is of bonus share and STT have to be paid at time of transfer and it's a long term, it will fall under 112A. Yes, it will fall under section 112A. Definitely. Okay, Divya, good morning. Dipanshu, this chapter note is not showing on portal because I've uploaded it yesterday only. It takes time, so might be by today evening you will get the notes on the portal. Don't worry. Okay. So no more queries. Okay. So B point is distribution of debentures or deposit certificate to shareholder, that is deemed dividend, and bonus shares to preference shareholder. So any distribution to its shareholders by a company of debenture, debenture stock, or deposit certificate in any form, whether with or without interest, and any distribution of bonus share to preference shareholder only. If bonus share is going to distribute to equity shareholder, that is not deemed dividend, but if bonus share has been allotted to preference shareholder, that is going to be your deemed dividend, to the extent the company possesses the accumulated profit, whether capitalized or not. Clear? Let's see the example. In this question, you can see the reserve and surplus has been given 3 lakh rupees. But out of this 3 lakh, 50,000 has been utilized for bonus share. So that means our accumulated profit is not 3 lakh, it will be 3,50,000. Now the question says the company issue bonus share to the shareholder in the ratio of 1:1. So we have equity shareholder also and preference shareholder also. For the purpose of preference shareholder, that will be called deemed dividend. So preference share capital was 1 lakh. So 1 lakh rupees will be the deemed dividend in the hands of preference shareholder. Okay. Next is distribution on liquidation. That was the topic which was under capital gain section. Okay. Any distribution made to the shareholder of a company on its liquidation to the extent to which the distribution is attributable to the accumulated profit of the company immediately before its liquidation, whether capitalized or not, is also called a deemed dividend. distribution on reduction of capital. So any distribution to its shareholder by a company on the reduction of its capital to the extent to which the company possesses the accumulated profit, whether capitalized or not. Let's see the example. Now you have reserved surplus of 2 lakh rupees, and out of that 2 lakh rupees, 50,000 has been utilized for the purpose of issue of bonus shares. So technically we have accumulated profit of 2,50,000, but there is profit and loss account also has been given in the debit side. So that will be reduced to calculate the accumulated profit. So technically we have only 1 lakh rupees as accumulated profit for the purpose of deemed dividend. So if there is any profit and loss account has been given, that means that is equivalent to loss which has not been adjusted against reserve and surplus yet. So we have to reduce that profit and loss account which has been given in the asset side. Now the case one, the company reduced share capital by 1,50,000 by setting of the debit balance of P&L account. So if company reduces its share capital by debiting its P&L account, that does not result in any kind of distribution. There must be some distribution to technically applicable the provision of deemed dividend. So if we reduced our capital by setting of the debit balance, that technically not distributing anything to the shareholder. So that is a not applicable case. There is no deemed dividend concept. But suppose the company reduced the share capital by 1,50,000 by refunding cash to the shareholder. So now cash has been distributed. That is an asset. So 150 has been distributed, but my accumulated capital or accumulated profit is only 1 lakh rupees. Lower will be my deemed dividend. That will be my answer. You can see that. The first case, there is no deemed dividend, but in the second case, there will be 1 lakh rupees will be your deemed dividend. So there is no example in the study material. I have inserted this example, these example that will help you to understand the provision easily. Okay. Meaning of accumulated profit, you can read it, of course. Now 222E. So we have 5 deemed dividend. We have covered A, B, C, and D. But the 222E is the most important deemed dividend. And I believe that on 222E, there can be question, numerical question can be framed. But again, we are discussing income from other source. Nothing is difficult. It's very simple chapter. So when I'm saying there is one provision income from other source that is difficult, kindly compare it with the other chapter. So you will find it, there is nothing difficult, very, very simple provision in respect of every provision of this chapter. So provision of deemed dividend under section 222E of the Income Tax Act 1961. It says any payment by a company not being a company in which public are substantially interested. So generally we are talking about private companies. Section 222E applicable only on closely held company. Clear? So the company in which public are not substantially interested, only on those companies, these provisions are going to be applicable. So it says if these companies distribute any kind of loan or advance, if loan and advances has been distributed to any shareholder having more than 10% voting power. So this loan in advance will not be treated as his liability. Generally, what is the treatment of loan in advance? That is going to be treated as his liability. That cannot be his income because it's a part of balance sheet generally. But in closely held company, that means technically the private company, they generally provide loans to its shareholder and do not ask the repayment ever. That is technically the distribution of income. Listen carefully. private companies generally provide loans to its shareholder in the nature of loan. So in the balance sheet, it will show as a liability. So that means loan should be payback some at some point of time after 1 year, 2 year, 3 year, 4 year, because it's a private company. So the shareholder is not going to pay the loan ever. So technically it's a distribution of income, but if it has been distributed in the name of dividend or any other kind of remuneration, that is going to be taxable in the hands of shareholder. So to avoid this taxability, what companies start doing practice that the private company transfer the part of their income to the shareholder in the name of loan and liability. So that shareholder is not going to pay tax on it because it's not an income, it's a liability. But he is not going to repay it ever. So technically it's an income because you are not going to practically repay it ever. It will form your part of balance sheet as a liability forever. So technically it's your income in the nature of name only loans. So income tax has amended the provision. It says if any private company distribute any loan or advances to its shareholder having more than 10% voting right, so still it's a kind of a liability. So you might get confused that why a liability is going to be treated as an income. Just because people start manipulating this provision. They are taking loan from the company, but they do not ever repay it. And because it's a closely held company, private company, घर की company, वापस ही मत करो, रख लो. Who is going to ask it? There is no bank. There is no outsider who gives you loan. It's your company. You are the shareholder. You are the owner. So you are not going to repay it, and nobody is going to ask for repayment. So income tax treated as an income. Okay, take the loan from your private company. We will treat it as your income, and you have to pay tax on it. So to stop that practice, to curb that practice, to curb that tax avoidance, income tax has framed section 222E. It says if any loan advances has been taken by a shareholder having more than 10% voting right in the company, directly or indirectly, that is going to be deemed dividend in the hands of the shareholder. So you have to either the loan has been given to us directly to the shareholder having more than 10% voting right, or if the loan has been given to any other concern, any partnership firm, etc., any other concern in which this shareholder, having a voting right or profit sharing ratio that is more than or equal to 20%. That's called substantial interest. So if the loan has not been directly given to Mr. A, suppose the shareholder, but it has been given to any organization in which Mr. A having a profit sharing of equal to or more than 20%, that's called substantial interest. So if the loan has been given to this concern, that is also going to be deemed dividend, or any person for the direct or indirect benefit of Mr. A. So technically, we covered directly Mr. A in the point number 1. Any organization in which Mr. A is having voting right or profit sharing ratio, which is substantial interest at any time during the previous year, or to any other person for the benefit of Mr. A directly or indirectly. So if any of these conditions have been fulfilled, that is going to be your deemed dividend. So here is the explanation in detail. It says any payment by a company that is not being a company in which public are substantially interested. So that means that is a company which is technically a closely held company. If it gives loan to shareholder being the beneficial owner of shares holding not less than 10% of voting power, that means 10% or more. Or if the loan has been given to any organization, any concern in which such shareholder is a member or a partner having a substantial interest, that means 20% or more, or any other person on behalf or for the individual benefit of any such shareholder. So we are talking about such shareholder, this shareholder. So technically we are saying if loan has been given directly to that shareholder or indirectly. That is going to be deemed dividend to the extent to which the company possesses the accumulated profit. So this is a theoretical provision. Any payment by a company in which the public are not substantially interested. Kindly read it. Exception is important, of course. There are two exceptions regarding this. If the company nature of businesses, if the company is a company who has the ordinary course of business is to providing loan. So if it is a loan financing company, and if it is providing loan to its shareholder in the ordinary course of business, like taking all the document, charging the interest, etc., as per the normal course of business, then it will not be treated as deemed dividend. It will depend on the fact of the cases that the loan has been given in the ordinary course of business or not. So this facility is only to those companies which are in financing business. Okay. So if the loan has been granted to in the ordinary course of its business and lending of the money is a substantial part of the company business, then that loan or advance to the shareholder would not be treated as deemed dividend. If dividend paid is set off against the deemed dividend, where a loan had been treated as dividend and subsequently the company declare and distributed dividend to its all shareholder, normal dividend to its shareholder, including the borrowing shareholder. And the dividend so paid is set off by company against the previous borrowing. The adjustment amount will not be again treated as a dividend. Clear? Subsequent repayment of loan or charge of interest at market rate does not make any difference. So if some amount has been declared as deemed dividend, suppose company gives you 1 lakh rupees as a loan and you having a voting right of 15%, that 1 lakh becomes your deemed dividend. In the very next day, you repay the amount of loan with the rate of interest. Still, once anything has been declared or deemed as dividend, then the repayment does not change the concept. It will always become deemed dividend. So if you have taken rupees 1 lakh, it becomes deemed dividend. And if you are going to repay it the very next day or the next week with the amount of interest, etc., it does not matter. That 1 lakh will remain your deemed dividend for that previous year. So note says subsequent repayment does not make any difference. Subsequent repayment does not make any difference. Example 1, HUF through its Karta, Mr. Kishore, is a shareholder in a private company and holds 13% shares in the company. So who is the beneficial owner of shares? HUF or Mr. Kishore? Of course, the HUF. Okay. The company has accumulated profit of rupees 10 lakh. The company gives loan. The company gives loan to rupees 2 lakh rupees to Mr. Kishore in his individual capacity. Remember, Mr. Kishore is not a beneficial owner. He is just the representative of HUF. So company gives the loan to HUF as well as Mr. Kishore. So to Mr. Kishore, company gives 2 lakh rupees and to the HUF, it gives 3 lakh 50,000 rupees. So who was the real owner of shares? That was HUF. Mr. A was just the representative. He does not own any shares in his individual capacity. So the company is the deemed owner of these shares and deemed beneficial owner of these shares, of course. So anything giving to the HUF by the company, HUF is the deemed or beneficial owner. So anything is given by the company to HUF is going to be deemed dividend. That is 3,50,000. 350 is deemed dividend in HUF because HUF is the beneficial owner of the shares. No deemed dividend in the hands of Kishore. He is not the beneficial owner. Example 2. Reserve and surplus 2 lakh rupees. P&L is 25,000. So 1,75,000 is my accumulated profit. The company is a closely held company and gives a loan of 3 lakh rupees to its shareholder holding 16%. So only up to 175 can be deemed dividend. Example 3, Mr. Rajiv holds 11% shares of Z Private Limited. The company has accumulated profits of 10 lakh rupees on 1st January 2024. Rajiv is also a partner in firm Messrs. AKR, in which his profit sharing ratio is 25%. So Mr. Rajiv has having 11% share in the company, and he's also a partner in AKR, in which he has substantial interest. Now, company gives loan to 2 lakh rupees to AKR and 50,000 to Rajiv. So both loan will be treated as deemed dividend, 50,000 in the hands of Rajiv and 2 lakh rupees in the hands of AKR. Okay. So that was the concept of deemed dividend. This is the clarification you can go through. Now these are types of dividend we were talking about in the starting. Basis of charge of dividend, deemed dividend. Normal dividend will be taxable when it is declared in the year in which it is declared. Okay. Deemed dividend will be taxable in the year it's so distributed, in the year that has been distributed. Deemed dividend under section 222E is going to be taxable in the year in which the loan has been paid. And interim dividend would be deemed to be the income of the previous year in which such dividend is unconditionally made available by the company to its member. Tax rate on dividend will be a normal income which will fall in your other income category and going to be taxable with normal rate of taxes, slab rate of person. You might remember under the capital gain, I asked you always divide your income in 5 parts. This is your other or balance income part. So dividend will fall your under this head, whether it's dividend or deemed dividend. Okay. Rahul, a resident Indian holding 28% of equity shares in a company, took a loan of 5 lakh rupees from the same company. Okay. On the date of granting the loan, the company had accumulated profit of 4 lakh rupees. The company is engaged in some manufacturing activity. Case first asks, is the amount of loan taxable as deemed dividend if the company is a company in which the public are substantially interested? Remember, these deemed dividend provision in respect of loan and advances under section 222E is only applicable if the company is a closely held company in which public are not substantially interested. But in this question, point 1 says that it is a company in which public are substantially interested. So section 222E is not applicable in point number 1. That will be a normal loan. It will not be treated as deemed dividend. Point 2 asks that if it is a company in which public are not substantially interested, then it will be a deemed dividend. The answer is yes, of course, because the shareholding is more than 10%, equal to or more than 10%. But the accumulated profit is 4 lakh. So even if the company has provided 5 lakh rupees, but up to only 4 lakh will be the deemed dividend in this case. The point number 2, only 4 lakh will be the deemed dividend, not the 5 lakh rupees. Okay, very simple. Now, deemed dividend concept has been completed. That was my point number 1, with the income which are specifically included under income from other source. Now, second is very simple, casual income. So, income which has been earned without any manual effort, or we can say with the help of luck. So, those income which has been earned, the majority part of earning is via luck, not by the any kind of other fixed sources. So that is like winning from lottery, game shows, etc. These are called casual income, which has been earned by the way of luck. That is, casual income means income in the nature of winning from lotteries, crossword puzzles, race, including horse races, card games, and other games of any sort, gambling, betting, etc., even including Now, online games also. So if there is any winning on your online games activity, that is also form part of your casual income and going to be taxable. Next is point number 3, that is important. Consideration received in excess of FMV of shares issued by a closely held company to be treated as income of such company where shares are issued at premium. So it says very simple provision. If there is a closely held company, suppose its face value 100 rupees, FMV of these shares is suppose 110 rupees, and the issue price is 125 rupees. So the provision says if there is a closely held company and it issued shares exceeding FMV, issued shares in the market exceeding FMV, then the difference is going to be taxable as income from other source. Like in this case, the 15 rupees is going to be taxable as income from other source. We have a lot of example also regarding this. So it says section 56 to bring to tax a consideration received from a person by a company other than a company in which public are substantially interested, which is in the excess of fair market value of the shares. The person from whom the consideration is received may be a resident or non-resident. Earlier there was only resident include till last year, but the amendment has been made and now the person from whom the consideration is received may be a resident or non-resident, it does not matter. We have going to see the example. You can see in example number 1, the A private limited. So that means a closely held company. Number of shares 10,000. Face value is 100. FMV is 120 and the issue price is 130. So if the issue price exceeding your FMV, then difference will be the income from other source. So you can see in this case, the difference is rupees 10, 130 and 120. 10 rupees per share multiplied by 1 lakh. So multiplied by 10,000. So this 1 lakh is going to be your income from other source in the hands of AP Limited. Clear? Now B Private Limited issued 20,000 shares. Face value 100. FMV 120 and issue price is 110. Now you can see in the second example, the issue price is less than FMV. The issue price in first example was more than FMV. So this provision has been applicable and the issue price also exceeding the face value. In this case, now FMV is 120 and the issue price is only 110. So issue price does not exceed the FMV. So this provision will not be applicable in example number 2. Example 3, C Private Limited, 30,000, face value 100. Now FMV is 90 and issue price is 98. So you can see that the issue price is exceeding FMV. This is the whole scenario. When issue price exceeding FMV, this concept applicable, but not. Because your issue price should exceed the face value. So you can see the issue price is technically at discount. It's not more than the face value also. So this provision will not be applicable because the issue price even exceeding the FMV, but it is not exceeding the face value. So that is not going to be taxable income from other source, because for the purpose of income from other source, the issue price must be at premium. It should not be less than the face value, as in example number 4. Now you can see example number 4 says that face value is 100, no problem. FMV is 90 and the issue price is 110. Now the conditions are fulfilled. Issue price exceeding the FMV and issue price is exceeding the face value also. So in this case, 90 and 110, the difference is 20 rupees. 20 into 40,000, that means my income from other source will be 8 lakh rupees. That is 20 multiplied by 40,000. So this was point number 3. Now moving on to point number 4, we have to cover a lot of provision, and I wanted that I will be able to complete the test your knowledge and MCQ also if in this session. That will be really good for you. So we are going in a little fast way. If there's any query you can ask, I will answer it, no problem. But these provisions are simple. I know if you are read these provisions once again, like deemed dividend, because these are new concept or this FMV concept, you will able to understand each provision very easily because there is nothing complicated in the provision. Only the gifting provision is little complicated, you can say, or for that I am going to make a diagram also. So for that purpose, I will explain. I know what is the complete provision. I will explain that in detail. Otherwise, what are these simple kind of provision? I am going to read it for you with the help of example. Like point number 4, we have discussed this provision in capital gain, that is interest received on compensation. Section 45.5, which talks about compulsory acquisition, in which we receive OC or EC, original compensation or enhanced compensation. So if there is any interest received on OC or EC, we have discussed there also that is going to be taxable under income from other source. 50% of that interest is going to be taxable. So over here, they are explaining the provision. You can read the provisions. Again, the point number 5 is also connected with capital gain, in which advance money forfeited under section 51. Section 51 says that any advance money has been forfeited from assessment year 15-16. There was a separate provision till 2014. After that, if any advance money has been forfeited on or after assessment year 15-16, the advance money forfeited is going to be taxable from income from other source, in income from other source. Now this is the provision regarding gifts I was talking about. This is the most important provisions of income from other source. And I believe most of the questions is going to be, numerical question is going to be framed on gifts provision. This is the concept we should all know we should have knowledge regarding this, because not for only academic purpose, but also for our personal and practical life. These are very, very important provision regarding gifts. And one should know about it who is even doing CA, not a full chartered accountant, but you should know these gifted provision right now. These are very, very important. Under capital gain, we have discussed about the gift provision under section 47. That was from the point of view of payer, not from the point of view of paying. So income from other source, under income from other source, we are going to discuss the provision of gift from the point of view of receiver. If you are receiving any property, any asset, or monetary payment as a gift, if you are a receiver, so kindly, whenever we are discussing the provision regarding gifts, please focus that we are discussing from the point of view of the receiver, not from the point of view of payer. Because from the point of view of payer, we have discussed this provision under capital gain chapter. Okay. So if you are going to receive monetary or non-monetary gifts from any person, whether your relative, etc., etc., then income from other source talks about it, and it's going to explain what is the treatment of these kinds of gift. Okay, let me take some queries if there is any, then we will discuss this topic. Miss Pooja asking about capital gains. Sir, if the year of agreement and the year of registration is different, then income arises under capital gain, in which year it would be chargeable? In the year in which the possession has been given. There is a section 47, point number 4, you should read. It talks about if there is a transfer of consideration and if there is a possession has been given and there is an agreement has been done. In that year, it is going to be chargeable as capital gain. If your kind of question is income from other source also, today we are going to discuss it. So if the money has been transferred and in the year in which possession has been given, that will be the year in which capital gain is going to be taxable. Okay. Either you can refer transfer definition of section 247. I guess there is point number 1, 2, 3, 4. No, point number 5 was 5. You should read it. Okay. Deemed dividend B and C. I've explained 22B. Okay. Rahul Jain, sir, in every chapter you are saying nothing is difficult. What is difficult? What is the meaning of difficult? What is the definition of difficult, Rahul? If you want to learn anything, if you have interest in anything, there is nothing difficult. And this is actually real, the truth. Okay. Next is deemed dividend once in Hindi. Okay, in short, Mr. Mohammed Suhail, डीम डिविडेंड के अंदर कंपनी जब प्रॉफिट का कुछ पार्ट डिस्ट्रीब्यूट करती है तो वो नॉर्मल डिविडेंड है. बट अगर कंपनी अपनी एसेट डिस्ट्रीब्यूट करती है, कंपनी अपनी कैपिटल रिड्यूस करती है कुछ डिस्ट्रीब्यूट करके, कंपनी लिक्विडेशन पे आपको कुछ डिस्ट्रीब्यूट करती है, या और किसी वक्त कंपनी आपको अपनी कोई डिवेंचर्स या बोनस शेयर डिस्ट्रीब्यूट करती है प्रेफरेंस शेयर होल्डर्स को, तो उन्हें डीम डिविडेंड मान लिया जाएगा अप टू योर एक्यूमुलेटेड प्रॉफिट्स. Example has been given. Kindly go through it. The loan case I have explained section 222E. If कोई प्राइवेट कंपनी, क्लोजली हेल्ड कंपनी अपने शेयर होल्डर को लोन या एडवांस देती है, ऐसे शेयर होल्डर को जिसकी शेयर होल्डिंग 10% या उससे ज्यादा है, या ऐसे ऑर्गेनाइजेशन को जिसमें वो शेयर होल्डर जिसके पास 10% या उससे ज्यादा की शेयर होल्डिंग है, वो ऑर्गेनाइजेशन में सब्सटेंशियल इंटरेस्ट रखता है, या किसी और पर्सन को फॉर द बेनिफिट ऑफ दैट शेयर होल्डर, तो वो भी डीम डिविडेंड बनेगा अप टू द एक्यूमुलेटेड प्रॉफिट्स. We have only one lecture, so it's not possible to explain things in Hindi also. That will take a lot of time, and we have to cover this chapter in this session only. Miss Priya, sir, how we come to figure it out that this loan in advance is not going to repay by its shareholder? Now the provision has been made by the government that if there is a private company and if they are going to give any loan or advances to its shareholder who is having more than or equal to 10% shareholding, etc., then that is going to be treated as deemed dividend. We do not need to check the intention. Generally, it happens earlier that people do this transaction and do not pay it. But because now government has made, income tax department has made a specific provision, then the intention is irrelevant. If you are a shareholder, if you took the loan for the purpose of loan and advances, whether you are going to repay it or not does not matter. It will be your deemed dividend always. Okay. Vaishali is asking. Sushil Kumar Barik asking, what do you mean by substantial interest? That is the part of, I guess, definition, basic concept. The chapter 1 covers the definition, I guess, regarding the substantial interest. And I've also explained if you have 20% or more voting power in any organization or profit share in any organization, 20% or more, that is called substantial interest. I have also explained it in the salary chapter, in which there is a definition of a specified employee. I have discussed this point over there also. Okay. Next is Anmol. Good morning, sir. Sorry for the delay. It's okay. Vaishali, sir, example 3, why in both case deemed dividend in partnership and individual? Because if the partnership firm in which that shareholder is a substantial interest, then that is any amount received by that partnership firm will also be treated as deemed dividend. Only by that way we are able to curb this tax avoidance provisions. So if that shareholder takes the loan, it is a deemed dividend. If that partnership firm takes loan in which that shareholder is having substantial interest, then it will assume that it's not partnership firm, it's technically that shareholder who is the partner in that firm has taken the loan. So in that scenario, that firm is also going to pay tax on that deemed dividend. It does not matter whether loan is secured or unsecured, Mr. Manish. Next is whatever is your deemed dividend, normal dividend, whatever kind of dividend, who is asking Rahul, that will form your part of other income and will be taxable as normal slab rate of income, depend on the person wise. There is no specific rate has been prescribed for the purpose of this dividend or deemed dividend. Next is closely held company is a private company. They can issue shares to their the shareholders. They are starting who's are the promoter, etc. They are not issuing share to the public. They are issuing share to those person. Those are the shareholder, the promoters, the directors. Okay. FMV means what are you asking, Mr. Sharman? FMV is fair market value. This word we have discussed almost 100 times in different kinds of chapter. Suman Berry, hello sir, hello, okay. Sir, if any interest is received, Miss Pooja, in case of compulsory acquisition, I have told you if there's any original compensation or enhanced compensation, and if any interest has been received, that is going to be taxable under income from other source. Okay. So now moving on to our gift provision, and we have to understand these provision with the help of a diagram. First of all, before the diagram, gift has been divided into two parts, whether it's a monetary gift or non-monetary gift. For non-monetary gift, we have two sub-part also. A, that is immovable property, that is land or building. We have separate provision regarding land and building if that has been received as a gift. And the B point is movable asset also. So for monetary, we include cash, etc., etc. For non-monetary, we includes immovable property, that is land and building or both. And for movable, there are 8 specific movable asset has been prescribed. So except these 8 specified asset, if you received any other asset movable, that will not cover, that will not going to be taxable as your income from other source. So that's a good news. If somebody is going to gift you something, that always check that if that asset does not fall in these 8 assets, then that is not going to be taxable in your hand. That kind of gift is exempted in the hands of the receiver. What are these 8 assets? Here is the asset name. First is shares and security. Look, you can see asset. We have movable asset. That means monetary item, etc. We have immovable. Under immovable, we have land and building, and we have 8 specific asset like shares and security, jewelry, archaeological collection, drawings, paintings, sculptures, any work of art, or bullion. Any other asset except above is outside the purview of income from other source if given WC or IC. WC is without consideration. That means if the value is 10 lakh rupees, you are receiving it is for not giving anything. The full value is free for you. Or IC is inadequate consideration. If any asset value 10 lakh, and the person is charging only 2 lakh rupees, that means that is called inadequate consideration. We will discuss all these things one by one. So the most important thing for this topic is you should understand if any asset has been given in question, you have to check first whether it includes or falls in these assets or not, whether it's mobile monetary assets or it's non-monetary assets. If it's a monetary asset, then it's going to be taxable. If it's a non-monetary asset, you have to check it out whether it's immobile property or movable. If that is a mobile property, then these 8 names you should have remember. These 8 assets you should have remember. If any asset other than these 8 assets we are receiving that do not have any treatment under income from other source, whether received without consideration, matlab completely free, or inadequate consideration, that means concessionally free. Okay. The provision has been given theoretically over here, and I am going to make a diagram which will help you to solve almost all the provision very easily. Okay. So let's solve it. with the help of a diagram. And please be careful because it's one of the most important topic of income from other source, or you can say the only important topic, in my opinion, under income from other source, which have some numerical implication, which can be asked in the exam. So we are discussing about the gift provision. Okay. So gift, whether it should be monetary, like check, cash, draft, etc., or account transfer, or it will be non-monetary. Under non-monetary, whether it will be immovable property, that includes land and building, or it will be movable property, having 8 specified assets. The 8 specified assets we have discussed, like jewelry, painting, archaeological collection, drawings, shares and security, bullion, etc. Okay. First of all, for monetary payment, the provision is very simple. It's very easy provision to understand. It says if any amount in aggregate exceeding 50,000 received from one or more person in previous. So it says if any person received in aggregate more than 50,000 rupees from one or more person in previous year, then this whole amount will be his income from other source. Suppose there is Mr. A. In the previous year, he received 20,000 rupees monetary from Mr. B, 10,000 monetary from Mr. C, 15,000 from Mr. D, and 10,000 from Mr. E. So Mr. A received 20 plus 10, 30 plus 15, 45 plus 10, 55,000. So in aggregate, he received monetary payment of 55,000 rupees in this previous year. So how much income will be going to be fall under income from other source? That will be 55,000 will be your taxable income from other source. Suppose he did not receive 10,000 from Mr. E, then the aggregate will be 45,000. So in that situation, there will be nothing taxable for monetary payment under income from other source. That's a very simple provision. There is no complication in this. Very simple, sorted. So for monetary payment, it's a simple provision. It will be checked in aggregate. And if any person received in aggregate more than 50,000 in a previous year from one or more person, then that aggregate amount, the whole amount is going to be taxable as income from other source. Now we are talking about land and building, that is immovable property regarding non-monetary item. So whether it's land or building or land and building, the provision says the immovable properties, or technically we can say the non-monetary items, either we are going to receive without consideration. That means we are not going to pay anything. We are going to receive that property for not paying anything. That means completely free. That is without consideration, or that will be inadequate consideration. That means for concessional. Suppose there is a property value 20 lakh rupees and somebody gifted that property to us without charging anything. So that is called without consideration. And if For 20 lakh property, we received only for 16 lakh rupees. 16 lakh. That means 4 lakh will be our free gift. That means that will cover under inadequate consideration case. So if we are not going anything in exchange, that is without consideration. If we are paying and we are getting any property at concessional or discount value, that is called inadequate consideration case. We can see in case of without consideration, point 1 says if stamp duty value, again stamp duty value as per section 50C of capital gain or section 43CA of PGBP, same meaning. The stamp duty value, same meaning. At the date of agreement, at the date of transfer, etc., exactly same copy paste meaning. So if the stamp duty value exceeding 50,000, then the whole amount will be income from other source. Suppose I received a immovable property without paying anything, without consideration from Mr. B. The stamp duty value is suppose rupees 5 lakh rupees. So that means exceeding 50,000, the full 5 lakh will be my income from other source. Suppose the stamp duty value is 40,000 rupees, then nothing is going to be taxable, that will be free for me. Point 2, if stamp duty value less than or equal to 50,000, then no income from other source. The important provision is separately these should be checked. This is not in aggregate. Like the monetary payment, that was different monetary payment, 20,000, 10, 15 and 10. And for the purpose, we accumulate them to check that whether it's going to be taxable or not, because the provision says in aggregate. There is no aggregate limit in this case. So if I have received two properties from Mr. B, stamp duty value 40,000, from Mr. C, stamp duty value 30,000. So there are two separate property. One is stamp duty value 40, one is stamp duty value 30,000. So nothing is going to be taxable because for the purpose of land and building, only for land and building, separately this stamp duty value should be checked. For each property, the stamp duty value should be checked. So in a previous year, if I receive 10 plot without consideration, each plot having stamp duty value 40,000 rupees. So total I have received 4 lakh rupees property, but nothing is going to be taxable. Okay. Now this inadequate consideration case, that is important. It says, in case of inadequate consideration, we have to find out the difference, the amount we got free. So under gift, we are technically taxing that amount which is free, for which we did not pay anything. Okay. So in case of without consideration, the stamp duty value exceeding 50,000. So technically we are not paying anything. So full value is income from other source. For inadequate consideration purpose, we need to find out the difference. For example, the value is 1 lakh. The stamp duty value is 1 lakh. And we paid only 60,000. So what is the free amount? The free amount is difference, that is 40,000. On the basis of that difference, we will see whether it's going to be taxable or not. Okay. So if consideration is less than stamp duty value. So the meaning of inadequate consideration means if the consideration we paid is less than the stamp duty value. Clear? And the important part, this is very, the difference of stamp duty value and consideration. The difference of stamp duty value and consideration is more than the more than the higher of the following. The provision says in case of inadequate consideration property, what is the meaning of inadequate consideration? When consideration is less than the stamp duty value. If the stamp duty value is suppose 10 lakh and we have paid 10 lakh rupees, then there is no difference because we have paid the amount up to the stamp duty value. So inadequate consideration means if consideration is less than stamp duty value. So if the consideration is less than the stamp duty value, then how we need to find the income from other source? So it says you have to find the difference of stamp duty value and consideration is more than the difference of stamp duty value and consideration more than the higher of the following. So we have to find out two values more than the higher of the following, that is 50,000 rupees, and second is 10% of consideration. So if the difference is more than the higher of these value, the difference is going to be your income from other sources. Now it says, then difference is income from other source. Just relax. Let me tell you with the help of an example. Suppose the stamp duty value is 10 lakh rupees and the consideration is 9 lakh, 40,000 rupees. So now we first, because the consideration is less than stamp duty value. So that means this is the case of inadequate consideration. Clear? Now we first need to find out these two values. And how much the difference? The difference is 60,000. This 60,000 going to be income from other source or not? That will depend upon these two things. So we have to find out the higher of these, 50,000 or 10% of consideration, which is 94,000. Whichever is higher is 94,000. So difference should exceed. This difference should exceed 94,000. And our difference is not exceeding 94,000. So this is not going to be taxable. Now suppose in the same example, these are very important example. Please write it down later. Okay. Now suppose in the same example, if stamp duty value was 10 lakh and consideration was 8 lakh. Now again we have to find out the 50,000 will remain always fixed or 10% of consideration, that is 80,000. So higher is 80,000. Now the difference, which is 2 lakh rupees. Is the difference exceeding this? The answer is yes. So if the difference is exceeding this, then this difference 2 lakh will be your income from other source. These two example is very important. That will clearly going to make you understand what is going to be taxable and when it's going to be taxable. You have to take 50,000 and 10% always. The higher of 50,000 or 10% of consideration should be compared with the difference. Difference mean inadequate consideration. So inadequate consideration in first example is 60,000. This should exceed higher of this because inadequate consideration does not exceed 94,000. So nothing is taxable. In this example, inadequate consideration is 2 lakh and the difference higher is 80,000. So it's exceeding the higher, that is going to be taxable. The full 2 lakh rupees will be income from other source. The good thing is we have to check it separately for each asset. So in case of immovable property, you have to check it the provision separately for each asset. There is no aggregate concept applicable. Now the movable properties, those 8 properties. Again, we have the same provision, but more simplified. Without consideration, inadequate consideration. Like we are receiving jewelry, shares and security, bullion, drawings, painting, etc. either without consideration or inadequate consideration. So what is the taxability provision, it's more simpler than the immovable property case. It says FMV of all 8 assets in aggregate. What is the meaning of all 8 assets in aggregate? I will explain. In aggregate, if exceeding 50,000, whole amount income from other source. In aggregate meaning, suppose I receive shares without consideration for 40,000, jewelry 5,000 free, and bullion 10,000 free from different people in a previous year. So I have to check the aggregate of these are the FMV of these 6 asset. So in aggregate it's 55,000. So that is going to be taxable. We do not apply aggregate case in case of immovable property only. For monetary purpose, we also applicable aggregate case, and for other movable asset, those are 8 assets, we have to apply that aggregate scenario. Again, the inadequate consideration, if difference between FMV and consideration, again in aggregate for 8 assets exceed 50,000, then whole amount as income from other source. For example, we received 2 properties like jewelry, 1 lakh rupees FMV for 80,000 rupees we received. So the difference is 20,000. Again, we received shares in the same year worth rupees 2 lakh for 1 lakh 60,000. So difference is 40,000. In aggregate exceeding 50,000, that means income from other source will be 60,000 in a total. So I will upload a chart also regarding the provision, but the example you should understand yourself. These examples are very important. Example 1, example 2, example 3, example 4. Okay. So this was the case of gift scenario. You can see in case of gift, if you have monetary gift received from one or more person in a previous year, and if it exceed more than 50,000, then full amount is income from other source. In case of immovable property, if you have received it without consideration, then if the stamp duty value exceed 50,000, full taxable. If stamp duty value does not exceed 50,000, no taxability. Separately, you have to check for each property. In case of inadequate consideration, according to me, the most important provision in all these provisions are this inadequate consideration of immovable property. So if consideration is less than stamp duty value, of course, that will be the case of inadequate consideration. You have to find out the difference of stamp duty value and consideration. And that difference should exceed 50,000 or 10% of consideration, whichever is higher. In that case, that difference is going to be taxable. Please refer to example 1 and 2 in this diagram, what I have made for you. So that was the case of taxability of gifts, etc. You have to go through the provision, you have to read it. Everything has been written in the notes, and please refer the chart for the purpose of understanding. This is the immovable property case without consideration, 50,000 or 10%, etc. The stamp duty value will be same as per section 43CA and section 50C. We have discussed in capital gain and PGBP both. So we are not going to repeat it, section 50C or 43CA. Movable property case without consideration, we need to take the aggregate. aggregate difference of all 8 properties. For inadequate also, we need to take the aggregate of that. Okay. This is the table which has been, which is summarized the provision for your help in a summary manner. Now the non-applicability of section 56(2). There is some exception also in respect of gift case. The cases we have discussed in this diagram. There are some exception of all these provisions, all monetary, non-monetary, movable, non-movable. So we have exceptions. In certain cases, these gifts are going to be exempted. These are not going to be taxable. We have certain exceptions, whether it's monetary payment, non-monetary payment, whether it's building, whether it's other 8 assets. And what are these exceptions we are going to discuss over here. So there are exempted gifts, we can say. We can say there are exempted gifts. However, any sum of money or value. So it talks about both monetary, non-monetary. Or property received in the following circumstances would be outside the ambit of section 56(2). If you receive from any relative on the occasion of marriage, under a will or by way of inheritance, in contemplation of death of the payer, from any local authority, from any trust or institution registered, from any fund or trust or institution or university, by way of a transaction not regarded as transfer, from any individual by a trust, from such class of person as may be notified. So these are not going to be taxable from point number A to K. And we have a specific provision regarding COVID-19. Till K point was there, L is also a part of that exempted. If you received any amount for the treatment of COVID expenditure, that is going to be exempted if certain conditions are fulfilled, or if someone received any amount on the death of any of his family member due to COVID-19, that is also exempted if certain condition has been fulfilled. So point number L talks about regarding the expenditure for the medical treatment for COVID by an individual from any person in respect of expenditure actually incurred by him on his medical treatment or treatment of his any family member for any illness related to COVID-19 subject to certain notified condition. These are notified condition A and B. Kindly read it. It's very simple that doctor's report should be submitted. We have to inform the department within 9 months regarding. M point is very important, in my opinion, regarding COVID purpose. If any amount is received by a member of the family or a deceased person. Now, point number L talks about the expenditure on medical treatment of COVID-19. It talks about now, point number M says, if any amount has been received on the death of any person by the family member due to COVID, then what is the limit? If the amount has been received from the employer of the deceased person, the person who has deceased, the amount has been received from its employer, then there is no limit. Whether it's 10 lakh, 20 lakh, 50 lakh, full amount is going to be exempted. And that amount is been received from any other person on the death of any family member up to rupees 10 lakh, that is going to be exempted. Whether the cause of the death of such person is illness related to COVID-19, we have to prove it to the government with certain certificate, etc. These are the conditions which has been notified. And we need to inform to the government also. Those assets we were talking about in case of non-monetary items, those are 8 assets, including the immovable property. These are 9 totally. So here are the name of the asset, immovable property, then shares, jewelry, collection, drawings, painting, etc. Relative definition, of course, you can go through it. These are the TDS implication. This is not the part of income from other source. This talks about the TDS applicability in case of income from other source situation. So that you will be able to understand when the TDS or advanced tax provision will be explained to you. After that class, you will be able to understand this second part of this in the hands of buyer, because it is connected with the TDS concept. The first part, that is in the hands of the seller, it is section 43 CA, what we have discussed in PGBP. And section 50C, what we have already discussed under capital gain. The second part will be regarding the TDS provision that will be discussed later. Now illustration 1. Mr. A, dealer in shares, received the following without consideration during the previous year. He received cash gift of rupees 75,000 on his anniversary. So gifts are received if it is received from relative or on the marriage. Anniversary is not marriage, fine, it's an anniversary. And is received more than 50,000. So this is going to be full value taxable 75,000. He received bullion, the fair market value of which is 60,000 on his birthday. So bullion is also the asset which has been included under the movable asset. So that is going to be taxable. Amount exceeding 50,000, that is going to be taxable. And it's on birthday, but there's not a occasion on which there is exemption. Exemption is only in case of marriage or in case of death or bill. So that is also going to be taxable 60,000. Next, a plot of land at Faridabad on 1st July 2023. A plot of land at Faridabad on 1st July 2023, the stamp value of which is 5 lakh rupees on that date. Mr. B had purchased the land in April 2009. Clear? Mr. A purchased from his friend Mr. C, who is also a dealer in shares, 1000 shares of X Limited, 400 each, on 19th June 2023, the fair market value of which was 600 each on that date. Mr. A sold these shares in the course of his business on 23rd June 2023. A very important note also in the provisions of gift provisions, which are written in the notes, you will go through it. Very important note, and it says, let me show you, that the income from other source, monetary or non-monetary provision will be applicable only if the receiver received that asset in the nature of capital asset, not in the nature of stock in trade. This is a very interesting note. This is applicability of section 56(2). This is very, very important. It says the provision of gift, what we have discussed, will be only applicable when the receiver received those property as an capital asset, but not as an stock. The provision of section 56(2)(10) would apply only to the property which is in the nature of capital asset of the recipient. It does not matter the nature of asset in the hands of the transferor, whether it's a stock in trade for him or it's a capital asset, does not matter. But income from other source provision regarding the gift case. In the gift case, we are talking about non-monetary cases. The non-monetary, whether it's immovable property or other asset. So the provision we have discussed regarding the more than 50,000 taxable, etc., will be applicable only if the receiver receiving these assets in the nature of his capital asset. Suppose Mr. A gifts 10,000 shares to Mr. B without consideration. The fair market value, suppose 5 lakh. Point 1, point 2. Point 1 says, suppose Mr. B deals in shares and he received these shares as his stock in trade. In that case, income from other source provision will not apply. PGBP provision will apply. That will be the stock in trade. When he will sell that stock in trade, then that chargeability under PGBP. But if the question says Mr. B does not deal in shares and these shares are asset, in that case, income from other source provision will be applicable and 5 lakh will be the income from other source in the hands of Mr. B. Like all these provision, what we discuss regarding the non-monetary assets, whether it's this case or these cases, will be applicable if it is in the nature of asset in the hands of receiver. Clear? Income from other source is a easy chapter, but it is not that short chapter. We have multiple provisions. So the time duration might be we are not able to discuss the test your knowledge question might be, but I just wanted that provision should be discussed complete. If there is any query in the test your knowledge question, so I'll be back on 23rd of January. I have told you we can discuss it over there. But because I have solved all the test your knowledge question, like 5 questions, and they are very simple, all theoretical provision. But always, please remember this provision. This is very important, that the income from other source provision will be applicable in case of non-monetary asset when the receiver received that asset as a capital asset and not as a stock in trade. Why I am telling you this? Because in this question or later question, it will be there. So you might get confused. So we were discussing illustration number 1. This case is not applicable in illustration number 1. In the later case, it is applicable. So that's why I am just explain it to you. So in the point 1, 75,000 taxable. In point number 2, 60,000 taxable. Now it says a plot of land at Faridabad on 1st July 2023. The stamp duty value of which is 5 lakh on that date. Mr. B had purchased that land in April 2009. So Mr. B had transferred this land to Mr. A. And he has received this land for without consideration. So in this question, point number 1 was saying 75,000 monetary payment taxable. Point number 2 says 60,000 is going to be taxable in the income from other source. This 5 lakh land, stamp duty value 5 lakh has been received. So this is going to be taxable again under income from other source, because it is without consideration and the value exceeding 50,000. Now Mr. A purchased from his friend Mr. C, who is also a dealer in shares. So Mr. A also a dealer in share, and he purchased some share from Mr. B also. 1,000 share of X Limited, 400 each on 19 June 23, the FMV of which was 600 each. On that date, Mr. A sold these shares in the course of business 23rd June 2023. Now, because he deals in shares and he receives shares for inadequate consideration, you can see we receive shares for inadequate consideration. FMV was 600 and 400 rupees he purchased. So technically 200 rupees each shares is inadequate consideration. But because he also deal in share, because share is not his asset, the receiver shares is stock in trade. So we will not solve it income from other source, and we are not going to solve it under PGBP also, because the question says kindly calculate income from other source and only capital gain provision. And because these shares has been sold and the sale consideration does not given in the question, so we are not able to even solve the PGBP provision, and even it has not been asked in the question. Now the 4th point says, further on 1st November 2023, Mr. A took possession of a property which is office building booked by him 2 years back. So somebody was asking me that in case of inadequate consideration, which year should be taken for the purpose of chargeability of capital gain, etc. So I have told her that the possession year will be taken as the transfer year. Okay, somebody was asked me. So this is the question regarding it. So on 1st November 23, he took possession of property, that is office building, booked by him 2 years back. The stamp duty value of the property as on 1st November 23 was 32 lakh, and the date of booking it was 23 lakh. He had paid 1 lakh by account pay check as down payment on the date of booking. So because he has paid down payment via check on the date of booking. So stamp duty value of the date of agreement will be taken, and that is the stamp duty value will be 23 lakh as per section 50C. Okay, as per section 50C, now we will take the date of agreement as the date of transfer for the purpose of stamp duty value. So 23 lakh is the stamp duty value, and the consideration we have paid is 20 lakh. So that is inadequate consideration in case of immovable property. So we have to find the difference compared to 50,000 or 10% of consideration, which is 2 lakh, whichever is higher. And the difference is 3 lakh rupees. So difference exceeding the higher value. So 3 lakh will be your income from other source in respect of this office building. Next, they ask us to calculate the capital gain because he sold the plot of land at Faridabad for 7 lakh rupees. This plot of land. So the provision says because it is a short-term capital asset, he received it July 23, transferred in March 24. So sale consideration will be 7 lakh. Cost acquisition was 5 lakhs. So that 2 lakh will be your capital gain. So that is going to be taxable as short-term capital gain. Okay. We have the solution also. You can see the solution 75,000, 60,000, 5 lakh rupees. The difference of 2 lakh rupees of shares, we cannot tax it in income from other source because that's a shares we received as a stock in trade, not as a capital asset. Now this 3 lakh rupees of difference that is going to be taxable as income from other source. Now your capital gain will be 2 lakh rupees. Discuss the taxability or otherwise of the following in the hands of the recipient under section 56(2). Akhil HUF received 75,000. If HUF received any gift from the member of that HUF, that is exempted. So Akhil HUF received 75,000 in cash from the niece of Akhil. And niece of Akhil, that is daughter of Akhil's sister, cannot be the part of Akhil HUF. So this 75,000 is taxable for HUF because if any gift received from the member of HUF by the HUF is exempted as per the HUF provision. Nishita, it's a member of HUF. This transfer gift 9 lakh rupees to HUF, that is exempted because she is the part of or member of that HUF. So that is going to be exempted, but point number 1 in which the niece paid the amount cash, that is not going to be exempted. Again, illustration number 3, he received 2 gifts, 100 shares. The value is 100 rupees per share. That means 10,000 rupees shares for without consideration, and jewelry is 45,000. So 45 and 10, that is 55,000. In aggregate, this is going to be taxable. Third point is important. You have the solution. You can see that. Kishan HUF gifted a car to son of Karta. Now, car does not fall in those specified asset. Car is a movable asset. And in the definition of movable asset, we have only 8 assets specified, and car does not fall in that category. So if you are giving car to someone, then in the case of receiver, the receiver is not going to pay any tax on it because car does not fall in the definition of asset. It is a solution also. Illustration 3, you have to go through yourself. It's again a simple question, and I will send the solution also. If we have time, I will solve it for you today also. But let me see how much provision has been left. Okay, compensation, then LIC provision, then Keyman. Okay, not much provision has been left. Then these specific, actually, there was a chapter number 3 earlier also that is regarding exempted income. So some provision of that chapter also included in income from other source study material from this year again. So this chapter, deductions part, I guess that's the last part we need to discuss. Okay. So When I'll be back, I will first solve illustration number 3 for you because it's a beautiful illustration. You will be able to understand a lot of things with the help of this illustration. And let me take some query, then we will go for the break. Uh, Manohar Yadav, Sirji, suppose a company given to loan to an organization which I have 20% substantial interest. Then tax charge will in my hand the organization in the hand of the organization in which you have substantial interest, of course. That deemed dividend will be hand out in that company in which you have the substantial interest. Suman Goyal, sir, can you explain gift from family member? If any relative gives you any kind of gift, that is 100% exempt from tax. You have to check the definition of relative. So if that person who is giving you the gift falls under the definition of relative, then any kind of monetary, non-monetary, all gifts are exempted without any limit. Uh, Naz Parveen Raima is asking, फैमिली मेंबर्स की डेथ पर LIC एक्सीडेंट का पैसा मिलता है तो वो टैक्सेबल होगा इनकम फ्रॉम अदर सोर्स में? LIC का पैसा अगर हमें डेथ पर मिलता है दैट इज एग्जेम्प्टेड सेक्शन 1010D. So that is going to be discussed after the break. We have rest with the provisions of insurance policy which has been received at the time of maturity or on the death of any person. So on the death, if any LIC payment has been received, that is completely exempted without any monetary limit. Okay. So Manish ji, can we go for a break? Manish ji? Okay. So welcome back, everyone. We were discussing the provision regarding income from other source. So topic is easy, but it's a quite lengthy topic. So let's cover it. So I do not think that we have a story time today left. If there's any time left in the end of the class, I'll tell you a very short story. So let's move on to the question we were discussing about. And it says Mr. Hari, a property dealer. Mr. Hari, a property dealer, sold a building in the course of his business to his friend Rajesh, who is a dealer in automobile spare parts. So whatever is Rajesh is receiving, it's a capital asset, not a stock in trade. Okay. On 1st January 2024, when the stamp duty value was 150 lakh rupees. Okay. The agreement was, however, entered into on 1st September 2023, where the stamp duty value was 140 lakh. Mr. Hari received a down payment of 15 lakh by cross-checked. So for the purpose of section 50C and 43CA, we can take the stamp duty value on the date of agreement or at the time of transfer. If at the time of agreement, the payment has been, any part of payment has been made via account pay check, but it's a cross check. So this value cannot be taken. So the value for the purpose of stamp duty purpose will be 150 lakh in this case. Okay. The date of agreement. Discuss the tax implication in the hands of Hari and Rajesh, assuming that Mr. Hari has purchased this building for 75 lakh on 12th July 2022. Would your answer be different if Hari was a share broker instead of a property dealer? So we will see it one by one. First of all, so illustration number 3, that was Hari. He was a builder. And Rajesh, who is an automobile dealer. Okay. The provision says in scenario 1, because he's a builder and he is transferring his stock in trade as a building. So what is the sale price? That was 150 lakh we need to take as per the section 43 CA. The consideration will be 150 and the purchase price. We are not going to calculate as per index cost of acquisition or cost of acquisition because we are treating it as in stock in trade. So this is PGBP we are solving. And the purchase price has been given 75 lakh. So 75 lakh will be his PGBP income. What should be done in the hands of Rajesh? So Mr. Rajesh receiving this property for inadequate consideration. And what is the inadequate consideration? The difference between the stamp duty value and the consideration paid by Mr. Rajesh. So the stamp duty value is 150 lakh and the consideration paid by Mr. Rajesh is 90 lakh rupees. So the difference is 60 lakh. Now we can see the difference is exceeding 50,000 or 10% of consideration, which is 9 lakh rupees, whichever is higher. So higher is 9 lakh rupees and the difference is exceeding this. So this difference is going to be income from other source in the hands of Mr. Rajesh. Clear? Now question says, suppose that Mr. Hari is not a builder, but he is a dealer in shares. So if he's a dealers in shares, so now this immobile property, this building, this immobile property will be his capital asset. And because now capital asset has been transferred, so provision of capital gain will be applicable. For the purpose of capital gain, we need the period of holding. It's less than 24 months. That means it's a short-term asset. Now the sale consideration as per section 50C we need to calculate, which will come again 150 lakh. And if we deduct the cost of acquisition because it's a short-term asset, then 75 lakh will be the short-term capital gain in this case. In case of Mr. Rajesh, there is no change whether Mr. Hari is a builder or whether Mr. Hari is not a builder. It does not make any change. Yes, if the question says that Mr. Rajesh is also a builder and this property held by him as a stock in trade, then PGBP will applicable, not income from other source. But this has not been given in question. We have to say that Mr. Rajesh case, there will be same provision, income from other source, 60 lakh rupees. It's a very good question. The implication has been written over here in detail. Kindly go through it. Now, compensation or any other payment received in connection with termination of his employment. If there is any termination of employment and if it does not fall under PGBP head or under salary head, then it's going to be taxable under income from other source. So if there is any kind of compensation received on termination, etc., and if does not fall under PGBP or salary head, then it's going to be taxable under income from other source. Here is an example. You kindly read it. Now the provision regarding the LIC or LIP, we can say, sum received including the amount allocated by way of bonus under a LIP other than a ULIP and Keyman insurance policy. ULIP is unit linked insurance plan and it is more connected like a mutual fund, etc. So the treatment of ULIP plan is like mutual fund, etc. In Keyman insurance policy provision, we will discuss later. Other than Keyman and ULIP, what is the treatment of amount received on maturity or on a death of a person under any LIP policy has been discussed over here. Any sum received under a life insurance policy, including the sum allocated by way of bonus on such policy, would not be included in the total income of a person, section 1010D. In respect of policy issued before 1/4/2003, that was exempt. Before 1/4/2003 and till 31st March 12, here is the provision. Between 2012 and 2013, the provision is here. After 2013, on or after 2013, the provision is here, which says where the insurance is on the life of a person with disability or severe disability, as referred to in section 80U. 80U will be discussed in deduction chapter, or person suffering from disease or ailment as specified under section 80 DDB, that is specified diseases, that is also be discussed in deduction topic. So it says if the person fall in point number A, and in that case, if any sum received under LIP, including the sum allocated by bonus is exempted. However, exemption would not be available if the premium payable for any of the year during the term of the policy exceed 15% of actual capital sum assured. So if any person suffering from disability and if any amount of life insurance policy has been received by him, then that amount will be exempted provided the premium paid would not exceed 15% of capital sum assured at any year. Then the amount received is exempted. In case of other than handicap, the premium paid should not exceed 10% of the maturity value of policy. In that case, that amount is exempted, whether received as a bonus, etc. Now, here is a new provision which is applicable from 1st April 2023. It says any sum received under a LIP, including the sum allocated by way of bonus, is exempt. Same provision as per above provision, like 15% and 10%. But the new limit has been also inserted. Earlier, the limit is only on percentage basis, that your LIP payment is exempted, including the bonus, provided the premium paid by you does not exceed 10% or 15%. of capital sum assured at any year, then the amount received is exempted. But there is now percentage as well as an amount also has been prescribed. This is further exemption would also not be available. If it is exceed 10% or 15%, exemption will not be available. This is the same provision as above. But now the other provisions, one more restriction has been applicable. And it says exemption would not be available if the amount of premium payable exceed 5 lakh rupees for any of the previous year during the term of such policy. So if your premium exceed 10% or 15%, exemption will be lost, or your premium payable exceed 5 lakh rupees for any of the previous year during the term of such policy, again the exemption will be lost. But one more complication. If you have multiple policies, in this case, your aggregate premium may exceed the 5 lakh rupees. What will happen in that case? This will happen in that case. In a case where premium is payable by a person for more than one LIP, other than the ULIP, because ULIP have a separate provision, and the aggregate of premium payable on such policies exceed 5 lakh for any of the previous year during the term of any such policies, exemption would be available in respect of any of those policy at the option of the assessee whose aggregate premium payable does not exceed 5 lakh for any of the previous year during their term. So now it says, suppose you have 5 policies, premium like this, 80,000, 2 lakh, 1 lakh, 40,000, 150. So now your premium exceeding 5 lakh rupees. So it says now only those policy you can claim for the purpose of exemption at your choice. Those policies premium does not exceeding 5 lakh rupees. So you can combine 2, 3 or this, but the aggregate should exceed 5 lakhs. So out of these 5 policy, you decide at your option that policy's payment can be exempted for those premium does not exceed 5 lakh rupees. So you can aggregate if you take 150 and 40, 190, then 290, then 490, then this 80,000, you have to leave it. You can claim the exemption of these 4 policies together. Okay. All policies payment will be exempted if the amount has been received on death. There is no restriction of 15, 20, 10% of 5 lakh. It does not matter. Any sum is received on the death of a person is exempt, irrespective of the annual premium payable on the policy. The condition of payment of 10, 15, 20, 5 lakh would not be applicable. So income tax is a very emotional act, and it says if there is a death, we will give you the benefit. Exemption is not available in respect of amount received from an insurance policy taken for disabled person under section 80DD. So if there is any disabled person and if he deceased, then in case of the amount of repayment on that LIP policy you receive, that is going to be taxable, that is not going to be exempted. Kindly read that is. The Keyman insurance policy provision we have discussed in salary chapter also. If there is any person on which the organization has taken the Keyman insurance policy, then any sum received on the repayment of that Keyman insurance policy is going to be taxable. If it is received by the employee, any amount, that is going to be taxable as salary head. If any amount is received by the employer, that is going to be taxable under PGBP head. If the any amount has been received by the employee after service, that is going to be taxable under income from other source. So that is not going to be exempted. That is going to be taxable. The meaning of Keyman, etc. You can read it. Income chargeable under the head income from other source only if not chargeable under the head PGBP. So there are certain incomes generally they can taxable under PGBP head, but if they are not going to taxable under PGBP head, then they are going to, these incomes are going to be taxable under income from other sources. First one is Any sum received by an employer assessee from his employee as contribution to provident fund, superannuation fund, or any other fund for the welfare of the employees. Income from letting out on hire machinery, plant, or furniture. Where letting out of building is inseparable from the letting out of machinery, plant, or furniture. From such letting out, interest on security. So might be you are feeling that point number 1, 2, 3, 4 should be taxable under PGBP. Yes, it should be. But if it is not going to be taxable under PGBP, then it's going to be taxable under income from other sources. However, the certain interest income arising to certain person would be exempt under section 1050. If you have some post office account and you have interest from post office saving bank account, in that case, 3,500 in case of individual account exempted, 7,000 in case of joint account exempted, interest on gold bond, interest on bonds, Keyman insurance policy is going to be taxable, whether under salary head or PGBP or income from other sources. Residual income, any income other than those which has not been explained above. And if it is not going to be taxable under any other head of income, that is going to be taxable under income from other source, as we discussed in the charging section 56. That is, salary received by a MP, MLA will not be chargeable to income tax under the head salary, but will be charged as income from other sources. There are certain more exemption has been inserted, as I have told you earlier. That exemption was under a separate chapter, I guess chapter number 3, but that chapter I guess has been removed, and the income related to that chapter has been inserted into various topics. So these are some income which has been exempted. First one is interest on money standing to the credit of individual in his NRE account. As per section 10.4, if there is a non-resident and he is maintaining an NRE account, then any interest accrue on that NRE account is going to be exempted if the specific condition has been fulfilled. It's a very, very theoretical provision, very simple. Kindly go through the provision, read it, because we have to cover a lot of provision. Compensation received on account of disaster. This is important on this topic. Question also has been asked in the examination, I guess for 2 marks. So if there is any disaster happen, and due to that disaster, the central government, state government, or local authority grant any kind of compensation. In that case, that compensation is going to be exempted in the hands of the receiver. So this clause exempt any amount received or receivable as compensation by an individual or his legal heir on account of any disaster. So compensation, remember, should be granted by the central government or state government or local authority only. If it has been granted by any trust, etc., that is going to be taxable. The meaning of disaster, etc., other condition has been over here. Question: compensation on account of disaster received from a local authority by an individual or her legal heir is taxable. Examine the correctness of the statement. The statement is not true because that is going to be exempted. Educational scholarship. The value of scholarships granted to meet the cost of education would be exempt from tax in the hands of recipient, irrespective of the amount or source of scholarship. So if any of you have received scholarship ever, or if you are going to receive any scholarship in future, then that amount is going to be exempted irrespective of the source, irrespective of the quantum. Any award for literary, scientific, and artistic work and other award by the government. Any award instituted in the public interest by the central, state, or by any other approved body is going to be exempted. There will be no taxability. Payment in commutation of a pension received from a setup by the LIC. Any commuted pension received by an individual from a fund set up by LIC of India, approved by Controller of Insurance or IRDA of India, will be exempted. Now, applicable rate of tax in respect of casual income other than winning from any online games. Earlier, all incomes are taxable under casual income under section 115BB, but from the last year, online gaming has been specifically taxable under income tax, so separate provision has been made. Taxability is exactly same as per normal casual income. They both will be treated on at same par. This section provides that income by way of winning from lottery, crossword puzzle, races including horse race or card game, etc., would be taxed at a flat rate of 30% plus surcharge if applicable and cess 4%. However, income by way of winning from any online game would not be taxed under this section. Separate section has been created with same provision. No expenses or allowance can be made from casual income. No deduction can be claimed. Adjustment of unexhausted basic exemption limit is also not permitted. We have seen that in capital gain last topic, that the fixed taxability of casual income with 30% tax rate. You cannot claim any expenditure, you cannot claim any deduction, and that is going to be taxed at 30%, and even you cannot claim the exemption limit out of this income. Taxability of online winning has been taxable under section 115BBJ. Same provision. The meaning of online games has been given. No expenditure, no deduction, etc. Tax rate is same. Same. Every provision of taxability is same, except the section has been changed. Deductions allowable. So if there is any income, then there will be some expenses allowability. So when we say deductions allowable, we are not talking about 80C to 80U deduction. In the respective chapter, deductions mean the expenditure, what we can claim out of any income. We are talking about that. So if you are earning any income from other source, then what kind of expenses you can allow as a deduction. So any genuine expenses, if you have incurred to earn that income, can be allowed as a deduction in a general sense. But there are some specific provisions also, like interest on OC and EC. We have heard it. The OC or EC is going to be taxable under income from other source. Interest on that, original compensation or enhanced compensation. And 50% fixed is exempted and 50% fixed is taxable. So in that case, actual expenditures are irrelevant. So we are discussing the cases or kind of deductions which can be allowed as an expenditure out of the income. So it says in case of dividend or income in respect of units of a mutual fund or income in respect of units of a specified company. So interest expenditure to earn such income is allowed as deduction subject to a maximum of 20% of such income included in the total income without deduction under this section. In case of interest on security, a reasonable sum paid can be allowed a deduction like bank charges, etc. Income consists of recovery from employees as contribution. A deduction will be allowed in accordance with the provision of section 3615A, which we have discussed in PGBP. That if any contribution is received by employer from employee for the provident fund or any approved fund, that initially it will be his income, and if the amount has been deposited within the time limit of that fund, then reduction can be claimed under section 36 of PGBP. So same thing has been repeated over here. Where the income to be charged under this head is from letting on hire of machinery, plant and furniture. So if your hiring of machine, plant and furniture has been done taxable under income from other source, then the repairs amount, insurance, premium, etc., or even depreciation can be claimed under income from other source. In case of income in the nature of family pension, so if you are receiving family pension, that is going to be taxable under income from other source, and you can claim a deduction of 33-1/3%. That means 33.33% or 15,000, whichever is lower, can be claimed as deduction. For example, if the family pension, we are talking about the family pension, not the normal pension under the salary head. So this is family pension. That was normal pension, commuted, uncommuted. So if somebody is receiving family pension, suppose 1,50,000 in a year, family pension, then deduction can be claimed 33.33%. That means 1 by 3, that is 50,000, or 15,000, whichever is lower. So 15,000 can be claimed as deduction. Balance 1,35,000 is going to be taxable. And this benefit can be claimed under both regime, whether it's a default tax regime or under optional tax regime. Okay. Next is, for the purpose of deduction, family pension means the definition has been given. Any other expenditure can be claimed if it relates to earn that income directly, except the capital nature expenditure cannot be claimed. Now you can see point number 7 talks about the compensation on EC and OC interest part. 50% as should be claimed as deduction, balance 50% going to be taxable. As the illustration suggests, interest on EC received by Mr. G during the previous year is 5 lakh, out of which 150 for that year, 165 for that year, 185 for that year, does not matter. In the year in which you received it, that is going to be taxable in that year under income from other source. 5 lakh received, 250 will be exempted, 250 is going to be taxable. Simple. We can say simplest. Deductions not allowable. Under PGBP head also, there were certain deductions which has not been allowed to claim out of the expenditure. And there were certain deduction which can be claimed. So we have just discussed the deduction we can claim. And now the point section 58 suggests what deduction we cannot claim under income from other source. Almost same provision as per PGBP. Like we can see, any personal expenditure, of course, cannot claim as deduction. Any interest chargeable which is payable outside India will not be allowed as deduction if TDS has not been deducted. So personal expenditure you cannot claim from any income, any income. And if any interest has been paid outside India, then again interest deduction can be claimed only if TDS has been paid. If no TDS has been deducted, interest deduction cannot be claimed. If any payment exceeding 10,000 rupees in cash, that cannot be allowed as deduction. Exactly same provision we have discussed under PGBP head. If there is any payment of any expenditure you want to claim, and if it exceeding 10,000 rupees per day per person, it has to be paid via any online system or via bank. Clear? Again, if the payment needs to be made in India to an resident, then in that case, only 70% reduction can be claimed. Same in case of TDS provision we discussed in PGBP. 30% will be disallowed. That 30% will be allowed in the year in which TDS will be deducted and deposited. No deduction in respect of expenditure incurred in connection with casual income. So in case of casual income, you cannot claim any expenditure, you cannot claim any deduction, you cannot claim the basic exemption limit also. So you cannot claim anything out of a casual income, whether it's winning from lottery, game shows, etc., etc. Method of accounting in case of income from other sources and PGBP only. We have option to select mercantile system or cash system, which should be regularly employed by the assessee. That is an option only available in these two heads, PGBP and income from other sources. Thank God we are able to reach to test your knowledge question, and we have also some time left, 9:26. So we have almost 15 to 20 minutes to complete our lecture, and I believe that I will be able to complete this test your knowledge part, and you will have our story time also. Okay, so very simple questions. You can see question 1 asks, you have to tell that in which head following income should be taxable. It's very simple. Examine under which head the following income are taxable. Rental income in case property held as stock in trade for 3 years. Can anybody answer me in which head is going to be rental income in case property held as stock in trade for 3 years? Let me see if there's any query. Till then, you have to answer me this question. Hemlata SN sir, checking whether SDV exceeding or does not exceeding 110% of the consideration is not applicable under gift provision. Yes, that is not applicable in gift provision. Okay. We have the separate provision regarding the STV, that is 50,000 or 10% of the consideration. So if the difference exceeding that part, in that case, it will be income from other source, else it will not be income from other source. Next is Ashwani Kumar. Sir, I am Ashwani Kumar. Your teaching way is amazing. This is my first live class. Before that, I watched the recorded class. Only one thing that I worried that your story part is in Hindi, but your way of teaching is amazing. Yeah, story feel Hindi nahi aata hai. Okay. Okay, advance Happy New Year. You too. Happy New Year. What kind of personal expenditure? Personal expenditure means, Nikitesh, any kind of family expenditure, what we call drawing in accounting. That's called personal expenditure. Like, suppose if you have a bank account, you have FDR, okay, in a bank, and the FDR interest is 1 lakh rupees. So that is income from other source. Okay. So you went to the bank and you withdraw that 1 lakh rupees in cash, your interest part. And when you are coming from the bank to your house, in between you just have reminded that you have to pay the school fee of your children. So you went to the school, pay 20,000 rupees out of that 1 lakh rupees as expenditure. And when you came back, you have 80,000 in hand. Now you cannot say that this is my income from other sources 80,000, because the 20,000 you have expended, that is for personal purpose. That cannot be allowed as a deduction. Okay, any personal expenditure cannot be allowed deduction under any head of income. So Kadambari is asking, giving the answer. First is income from house property. Okay, Mr. Rahul Sharma is saying, sir, we don't have a grossing up topic related to income from other source. Rahul, the grossing up topic will be covered under TDS provision, because for the purpose of grossing up, you should know when to deduct a TDS. So if you are not aware of the TDS provision yet, then students might not have understand how to gross up the income and why we are grossing it up. So when the faculty will take the TDS concept provision, at that point of time, you will be able to understand the grossing up provision. At that time, that will be discussed. So the correct answer is income from house property. Rental income in case property held a stock in trade for 3 years. You might forgot that under income from house property, we have discussed that for 2 financial year from the end of the year in which property has been completed as stock in trade, then it need to be termed as deemed let out and going to be the part of income from house property. So whether it's not let out or let out after 2 years, that will be your income from house property. Okay, salary received by a partner from his firm is PGBP income. Rental income of machinery will be income from other source or PGBP, depend upon the circumstances. Circumstances like frequency of transaction. If the renting of machinery is your frequent business, frequent nature of transaction you have done, you are involved in that work, then it will be your PGBP. Otherwise, it will be your income from other source. Winning from lottery by a person having the same as business activity does not matter. Winning from lottery will always be your casual income, income from other source. Salary payable to a member of parliament, of course, income from other source. Receipt without consideration, that's it is gift, income from other source. So in case of retirement, interest on employees' contribution, income from other source. Rental income in case of a person engaged in the business of letting out property will be PGBP income. Question 2 says, examine whether the following are chargeable to tax and the amount liable to tax. A sum of 1,20,000 was received as gift from non-relative. Remember, 1,20,000 was received as gift from non-relatives by Raj on the occasion of the marriage of his son, Praveen. So is it going to be taxable in the hands of Raj or not? Kindly answer question number 2. A sum of 120 was received, monetary amount. It's a monetary amount, okay? as gift from non-relatives. So if it is gift from relative, it's always exempted. If any gifts at a time of marriage, that is also exempted, whether from relative or not relative. So on the basis of these 2 points, kindly answer whether is 1,20,000 going to be taxable or not. So that is going to be taxable because the marriage is of his son. So if the son is received 1,20,000 on his own marriage, that can be exempted. But the amount received by the father of the person who is getting married. So in that case, that amount is taxable in the hands of Mr. Raj. Now interest on EC 96,000 received on 12th March 2024 for acquisition of urban land, of which 40% relates to 20 to 23. How does it matter? Interest on OCEC will be taxable in the year in which received. 96,000 received. So 48,000 will be exempted and balance 48,000 is going to be taxable. You can see that. Clear? Next question number 3. On 10/10/2023, Mr. Govind, a bank employee, received again 5 lakh as a EC. This has been discussed in the illustration also. 2,50,000 will be exempted. 250 is going to be taxable. You can see the solution. Okay, the following details have been furnished by Mrs. Hemali pertaining to the year ended on 31st March 24. Cash gift of 51,000 received from her friend on the occasion of her Shasti Patha Purthi, a wedding function celebrated on her husband completing 60 years of age. This was also her 25th wedding anniversary. So first of all, she received cash gift of 51,000. That means exceeding 50,000. Taxability first condition fulfilled. Receipt from her friend, not relative. So taxability second condition fulfilled. And it is on the anniversary, not on the marriage. So third condition of taxability also fulfilled. So 51,000 is going to be taxable. On the above occasion, a diamond necklace worth 2 lakh rupees was presented by her sister living in Dubai. So does diamond falls under the definition of non-monetary item? The answer is yes, because it's a jewelry. So 2 lakh rupees jewelry exceeding 50,000. So going to be taxable, but it is given by her sister. That means relative. So if relative gives you anything, anytime, any occasion, non-occasion, Monday, Tuesday, Wednesday, Thursday, any day, does not matter. That is going to be exempt. When she celebrated her daughter's wedding in the same year, on 21st February 2024, her friend assigned in Mrs. Hemali's flavor a FDR, fixed deposit, held by the said friend in a scheduled bank. The value of FD accrued interest including 52,000. Now, point number 3 is having two opinion of taxability. It says FDR will be monetary or non-monetary. It has not been defined in that FDR will be a monetary asset or not, whether it's equivalent to cash, bank check or not. So if the FDR does not fall as an asset, if it is not an asset, then in that case, this 52,000 is not going to be taxable. But if FDR, suppose treated as a monetary, because it's also a kind of an amount which has been deposited in bank, so but has not been defined in act. So if it is treated as monetary value, then in case it's 52,000 is going to be taxable, and 50,000 for point number 3 and 51,000 from point number 1. So total monetary payment in a year she received is 1,03,000. That is going to be taxable. This 2 lakh is going to be exempted. So third point is having two opinion. The study material solutions also talks about the both solution. You can see it. They have two possibilities. If the FDR is treated as an asset, then it's going to be taxable, of course. If it is not treated as an asset because it has not been defined in the act anywhere, then in that situation, that is not going to be taxable. The last question is question number 5. So examine the following transaction in the context of Income Tax Act 1961. Okay, so you are giving answers. Retro, very good. Manohar, very good. Swati, very well done. Kadambri, well done. Okay. So examine the following transaction in the context of Income Tax Act 1961. Mr. B transferred 500 shares of R Private Limited to Messrs. B Company Private Limited on 10th October 2023 for 3 lakh rupees when the market price was 5 lakh. The index cost of acquisition of shares for B was computed at 4,45,000. The transfer was not subject to STT. Determine the income chargeable to tax in the hands of Mr. B and Messrs. B Company Private Limited because of the above said transaction. So Messrs. B Company Private Limited, he is the receiver and he received 5 lakh rupees market price shares at only 3 lakh. So that will be his income from other source worth rupees 2 lakh rupees. Because difference is 2 lakh rupees, which is exceeding 10%. Oh, sorry, 10% case is not applicable in this because that is applicable in case of only immovable property. So it is exceeding 50,000. So that is going to be taxable 2 lakh rupees over here. Clear? From the point of view of Mr. B, there is a capital gain concept. The sale consideration is 5 lakh. The market value we have to take less the index cost acquisition has been given in question 445. So that means the capital gain taxability in the hands of Mr. B is 55,000. Mr. Shizan is employing in a company in a taxable salary income of rupees 5 lakh. Okay. He received a cash gift of 1 lakh from Atma Charitable Trust, which is registered trust. So any gift received from a registered trust is going to be exempted. So the solution of point number 1 you can see, but the solution of point number 2 says it's a trust, so it's not going to be taxable. So we have completed the whole provisions only in one session, and test your knowledge question also. And I believe that if you think that any provisions you might not able to understand properly, it's just because today we have to complete a lot of provision. And I have personally wanted that all test your knowledge question and example of study material should be discussed in the lecture. So it actually helps you to understand the provision very easily. Otherwise, there will be a lot of confusion after the class. So if there is any confusion in any provision, kindly revise twice. As I always say, revise twice. Even if there is any confusion, you can ask me in the next session on, I guess, 23rd of January, etc. I will explain that. Let me see if there is any query regarding it. Sir, for the gift of rupees 50,000 cases, if any one of the condition is not satisfied, then it is taxable. Yes, Swati, exactly. If any of the condition does not satisfy, if the amount exceeding 50,000, if it is not from relative, that is going to be taxable. But if it is from relative, then it does not require at a time of marriage. So if gift receipt from marriage on marriage from anyone, that is exempted. No other condition required to be satisfied. If gift receipt from relative, anytime, any amount, that is also going to be exempted. So if the exemption provision is applicable, then all other conditions are irrelevant, that is going to be exempted. Otherwise, if any condition does not satisfy, that is going to be taxable. So yes, we have the story time. Have a very nice story. It's a very short story, very beautiful story. So the story is for you, all of you. And story क्या है? Once upon a time, बहुत साल पहले की बात है. एक पर्सन थे, एक उन्हें अपने एक मूर्ति बनवानी थी, स्कल्पचर ऑफ अ गॉड, फाइन। उन्होंने एक कॉन्ट्रैक्ट दिया एक मूर्ति बनाने वाले को, उसको कहा कि हमें मूर्ति बनानी है अच्छी सी। तो वो मूर्ति बनाने वाला वो गया और दो बहुत बड़े बड़े स्टोन्स लेकर आया, बहुत बड़े पत्थर लेकर आया, जिससे उसे मूर्ति बनानी थी, दो लेकर आया। तो पहले को उसने अपने इंस्ट्रूमेंट से, अपने टूल से बनाना शुरू करा। तो बनाते बनाते उस जो पहला स्टोन था उससे बहुत पेन हो रहा था। एंड उसने कहा कि भाई प्लीज मेरे ऊपर ये एक्सपेरिमेंट मत करो, मुझे मूर्ति नहीं बनना और मेरे को बहुत पेन हो रहा है, एंड लीव इट। तो उसने पूछा आर यू श्योर, मतलब सच में चाहते हो कि मैं तुम्हें मूर्ति ना बनाऊं? तो उसने कहा हाँ, आई डोंट वांट टू बी अ स्कल्पचर, मुझे नहीं बनना है किसी भी भगवान की मूर्ति, मुझे छोड़ दो, मुझे बहुत पेन है। तो उस बनाने वाले ने उसे छोड़ा और सेकंड वाले स्टोन पे काम करना शुरू करा। लेकिन उसने पूछा उससे कि देखो भाई, मैं तुम्हें एक गॉड की मूर्ति में कन्वर्ट करने के लिए काम करूंगा और बहुत पेन होगा, बट इफ यू वांट तो मैं इस काम को आगे बढ़ा सकता हूँ, वरना मैं फिर कोई और पत्थर ढूंढ के लेकर आऊंगा। तो उसने बोला नहीं, यू कैन गो अहेड, यू कैन स्टार्ट योर वर्क एंड आई एम रेडी टू बी अ स्कल्पचर ऑफ अ गॉड। एंड ही स्टार्ट डूइंग दिस वर्क। उसने बहुत किया, उसको बहुत पेन होता था। जो दूसरा पत्थर था वो बड़ा आराम से अपनी लाइफ काट रहा था, उसे लगा वाह मैं बच गया, मुझे बिल्कुल भी पेन नहीं हो रहा, एंड देखो उसको कितना पेन हो रहा है। एक महीने बाद मूर्ति बनी और बहुत सुंदर गॉड की स्टैचू बना। और फिर जो मंदिर में जिसने ऑर्डर दिया था वो उस वाली मूर्ति को लेने आया। उसने गॉड वाली मूर्ति ली और लेके जा रहा था, बट उसने नोटिस करा कि दूसरा वाला जो फर्स्ट वाला स्टोन था बड़ा सा, वो भी वैसे ही है, वो रॉक वैसे ही पड़ा हुआ है। तो उन्होंने कहा हम इसको भी लेके जाना चाहते हैं और इसको अपने मंदिर के मूर्ति जो होगी उसके पास रखेंगे नीचे, और लोग इस पर आकर अपना कोकोनट जो लाते हैं तोड़ने के लिए वो इस वाले जो रॉक है इस पर तोड़ा करें। अब वो दोनों एक ही मंदिर में पहुंचे। तो जो सेकंड वाला रॉक था वो अब एक मूर्ति बन चुका था भगवान की, सब उसको बहुत प्रेस करते थे, उस पे फूल मालाएं चढ़ती थी और रोज उसे नहलाया जाता था, सफाई करते थे, सब उसका आशीर्वाद लेते थे, बड़े बड़े लोग आते थे उसका आशीर्वाद। और जो बगल में दूसरा वाला था उस पे लोग आके अपना नारियल फोड़ते थे, तो उसको रोज लगती थी डेली, क्योंकि एक दिन में 200 100 200 कोकोनट्स पे फोड़े जाते थे। तो फिर जब रात होती थी तो फिर एक दिन उसने, जो स्टैचू वाला था रॉक, उसने उसको बोला कि देख, अगर तुमने पहले स्टार्टिंग में ही ये वाला पेन ले लिया होता जो मैंने लिया था, तो आज तुम मेरी जगह होते और तुम्हें रोज नारियल वाला जो पेन है वो नहीं लेना पड़ता, और सब लोग तुम्हारी पूजा करते, सब तुम्हारी वर्शिप करते, सब लोग तुमसे आशीर्वाद लेते, तुम्हारा कितनी केयर होती, रोज तुम्हें नहलाया जाता, अच्छे कपड़े पहनाए जाते, तो लाइफ कितनी अच्छी होती। बट जस्ट बिकॉज कि उस टाइम पर तुम्हें आराम चाहिए था, पेन नहीं चाहिए था, यू जस्ट डिनाइड इट, एंड उसकी वजह से आज क्या हो रहा है, यू हैव टू सफर दिस थिंग फॉर द एंटायर लाइफ। एंड क्योंकि मैंने उस टाइम पेन लेना चूज करा कि आई विल टेक दिस पेन बिकॉज ऑफ द माई फ्यूचर, कि मुझे पता था कि अगर मैं एक अच्छा एक स्टैचू बन पाया तो मेरी लाइफ फ्यूचर में इजी हो जाएगी। सो व्हाई इट वाज हैपनिंग, इट्स सेम विद ऑल ऑफ योर लाइफ। अभी ये जो प्रोसेस है ना, यू ऑल आर रॉक्स लाइक दैट। अब आप में से जो लोग इस पेन को लेकर सीए बनने के लिए तैयार हो, हम सबकी लाइफ में ऑप्शन मिलते हैं, या तो इजी लाइफ ले लो, उसके बाद सारी लाइफ परेशान होते रहेंगे, लोग हम पर कोकोनट फोड़ते रहेंगे, या अभी मेहनत कर लो 2-3 साल अच्छी तरह से, and फिर आप उस स्टैचू की तरह हो जाओगे जिसके सामने लोग आपको विश करेंगे, लोग आपके जैसा बनना चाहेंगे, कई सारे लोग आपसे, आपको पैसा भी मिलेगा, यू विल गेट रेपुटेशन, रिकॉग्निशन, रिस्पेक्ट। सो इट्स योर चॉइस कि आप लाइफ को किस तरह से चाहते हो। आई गेस आप में से बहुत लोग होंगे जिनकी कुछ प्रॉब्लम्स होंगी। आई हैव सीन समबडी, मैरिड पर्सन आल्सो ओवर हियर इन द क्वेरी सेशन। सो लाइफ में सबके लिए बहुत चीजें बहुत प्रॉब्लमेटिक हैं, हो सकता है आपके साथ भी लाइफ में कुछ और प्रॉब्लम्स भी हो, बट बिलीव मी, if you will able to pass this time, if you will going to suffer this time, if you will going to struggle this time, if you are not going to quit this, if you are going to achieve your target, so whatever problem you are facing, you will be like that statue which will become a god one day. So you're not going to become a god, but your future will be really really nice. And if you are going to quit, if you are going to uh, not going your focus on your studies, and you are thinking you can make fool anyone in your world, in the world, But you cannot make fool yourself. Remember always this. You always know the reality of your life. That whether you are actually giving your 100% into your study or not. So please be focused, be steady. At least give your 100%. Whatever will happen. But at least try to give your 100%. उसके बाद जो होगा देखा जाएगा, बट अपने 100% से पीछे मत हटो. And I believe if you are able to give your 100%, you will definitely going to be a chartered accountant very soon. They all will be like Swati, CA Swati Krishna, CA Ram Jha, CA Shivam Shukla, CA Devra, CA Kadambri, CA Ritro, CA Manohar, CA Mohammed, CA Hemlata. They'll be like this. Every one of you will be like this later or soon. So please, if there is any problem, if you are having a lot of pain, struggle in your life nowadays, believe me, the God is actually giving you this pain because He knows if you're able to take this pain right now, if you're able to cross this journey, then one day you will not regret this. This will worth. एक वो एनिमल होता है बाइसन, आई गेस बाइसन एक एनिमल होता है और उसकी बड़ी इंटरेस्टिंग बात है. जब स्ट्रॉम आता है ना, विंटर स्ट्रॉम आता है, वो बहुत तो ऐसी जगह रहता है, बहुत हिल एरिया पे, तो वहां विंटर स्ट्रॉम आता है तो ही इज द ओनली एनिमल जो स्ट्रॉम से भागता नहीं. बाकी सारे भागकर छुप जाते हैं स्ट्रॉम से बचने के लिए. उस स्ट्रॉम के सामने से जाता है, वो वॉक करता है इनटू द स्ट्रॉम से. पता है कि अगर मैं यहां से वॉक करके निकल जाऊंगा तो 10 मिनट बाद मेरा स्ट्रॉम ये क्रॉस कर जाऊंगा एंड देन आई विल बी इन पीस. बाकी सब जो स्ट्रॉम से भागते हैं वो 2-2 घंटे 3-4 घंटे तक भागना पड़ता है उस स्ट्रॉम से. But he's the only animal who faces with the courage that if I'll cross this, then I'll be in peace in comparison to all others. So it's a very good characteristics of that animal, that is bison. So please do not fear. Have your courage. लड़ते रहो, पढ़ते रहो. We will see each other on 23rd of January. Till that, very, very, very happy new year. Take care of yourself and please focus on your studies. I will upload the MCQ. If there's any issue or any problem in MCQ or any topic, you can ask me on the next session. So have a good day. Happy New Year to all of you. So Manish ji, can we close the session now?